Welcome to Buy, Hold, Sell. My name's James Mulley. I'm joined by Roger Montgomery from the Montgomery Fund.
G'day, James.
And Ben Clark from TMS Capital.
James.
We're going to kick it off with a discussion on US dollar earners and stocks that can benefit from a falling Aussie dollar. It's been a strong theme this year. We've seen the US dollar earners outperform. Roger, is it too late for this trade or is there a bit more in it?
No, absolutely not. Even personally, I've put money into unhedged US dollar funds and also into term deposits in US dollars. The fact is that our products are uncompetitive, they're expensive, and our labour is uncompetitive and expensive. And if we're not prepared to make the change, then the world makes the change for you by pushing the currency down. We've heard the RBA say they need the Australian dollar lower. I think it's got further to run. I'm certainly not changing my positions, and that's my view. I think we could see a mid 60 cent Australian dollar.
Ben, does the dollar have further to fall? And when a trade gets an aim, offshore earners, is it then a crowded trade?
I think it is at risk of a crowded trade if you're purely buying stocks on the basis of US dollar exposure rather than focusing on the quality of that company's earnings profile with a view that potentially the US dollar exposure could help it. One note of caution I would have is a lot of the stocks that sort of get thrown into that basket, not all of them are quite obvious winners, I think, as some think. You have to look at what their cost currencies are. Maybe their competitors are also getting a pretty big free kick from a fall of their currency versus the US dollar. So you still got to understand the industry and the company. But generally, I think the trade's got somewhat further to go, mainly because I think consensus analyst forecasts are still using Aussie dollar assumptions that quite a bit above spot. So
they take forever to move them, don't they?
They do. And even if the currency levels out here, there'll be some price momentum as analyst valuations catch up to what's going on.
Mm-hmm. Roger, if the dollar does fall further, the Aussie dollar, are there particular stocks that actually don't benefit from this, or does it hurt other companies in the market?
Of course it does. Importers, classic example. You've got the reject shop type businesses that are unwinding hedges from higher levels, and when they roll their hedges on at these levels, they're going to be in some pain. So it's vital that people understand what exposures companies have. Most people think JB Hi-Fi is exposed to the currency. The companies that they contract to supply the goods are, but they aren't directly, not to as great a degree as, for example, the reject shop. So it's important to understand that if you're investing yourself. But look, companies like Cochlear and CSL, they're great export businesses. They've got long non-discretionary growth profiles ahead of them. They might be a little bit expensive now, but you might find what looks expensive now is actually cheap in the future if the Aussie dollar falls further.
Yep. Benny?
I think that the other thing you can look at is what wins internally, and like two of our preferred stocks are Sydney Airport Group and AIA. And I still think one of the big themes over the next decade to two will be inbound tourism. And as our currency falls, of course, this becomes a more attractive place to come and visit. And we're really seeing, I think China's now the third largest inbound tourist by nationality into Sydney, which has been an incredible change in such a short period of time. So there are other winners that, not necessarily selling things offshore, but will benefit from that.
Roger's been a bit of a trend or a movement from domestic fund managers to set up offshore managed funds.
We're one of them. We've set up the Montgomery Global Fund and Montego Global Fund.
So with the currency doing what it's done, you clearly don't think that it's too late to be looking to get offshore?
No, look, there are companies out there like Essilor, for example, 40% global market share in the production of corrective lenses. 40% global market share. That means 4 people out of 10 in Australia have paid this company money and they don't even realise it. Then you've got probably 2.8 billion people in the world that need corrective eyewear, and only about 1 billion people or 1.2 billion who have it. So again, another long non-discretionary growth profile company. And then you've got companies like Apple. Apple is an amazing business that's the biggest business in the world, and yet it grew its revenue in the last quarter 33%, 60% came out of China, where there's only 12% 4G penetration. And they've seen the biggest switch out of Samsung phones and Android phones into iPhones just in the last few months. And that will pick up as phone companies move from 2 and 3 year plans to 1-year plans with anytime upgrades. So this is a company, you know, there's so many, even if the Aussie dollar doesn't go down any further, you've got businesses overseas that have huge growth profiles ahead of them, and you'll still make money out of those.
Ben, when you look offshore, do you see a more attractive opportunity set than you do domestically?
I think there's certainly, you know, industries and companies of a scale and size, and you know, particularly in areas like technology, etc., that we just don't possess on our stock exchange, and a number of our sort of blue chips stocks are very sort of inwardly focused on an economy that's not growing that rapidly. So certainly, James, you know, I think there's great opportunities in companies. I'd be probably a little bit more wary that, you know, the MSCI has done 25% per annum for the last 3 years now. And, you know, I'd be a bit more cautious about the outlook for international markets, because I just find it hard to believe that that's going to continue to be replicated. But it will be a stock picker's market, and as Roger sort of identified, there'll be some great opportunities out there that can still do well, you know, in tougher markets.
You look at Apple, just as an example. Take the cash out of the business, it's trading on 10 times.
Yeah, it's amazing.
It's incredible. You know, it's incredible. We just don't have those in Australia at the moment. We will in time, and you want to take advantage of them when they occur, but right now there seems to be more opportunities overseas.
And a lot of our growth stocks, I would say, seem to trade at much higher forward multiples than international growth stocks, because we've got less of them.
Times.
Right, and there's a pretty small cluster of those, and investors here pay up.
Okay. Well, it sounds like there's more opportunities on the currency front, and potentially some gems looking offshore as well.